So what exactly happened today? Why is it that Microsoft originally sold off and then shortly after began to recover? I'm going to be breaking it down for you guys all within this video, and I'm going to try to keep it super short and sweet. And if I do that for you, I really hope that I earn your thumbs up, and maybe you could even consider subscribing if you feel like I earned it. With that being said, Microsoft reported earnings after the bell, and as you guys can see, it didn't react in a very positive way. You might originally believe that, this thing must have missed earnings on why it sold off so much. I mean, at one point it was down almost about 8%. But no, that's definitely not the case. Microsoft's earnings actually came out better than what is expected. Their overall earnings per share and their overall revenue were actually beat. And once investing.com properly updates, you guys will see that, yes, the earnings per share came in at $2.95 per share, beating forecast. And revenue was also beat with an expectation of $64.38 billion, but we came in at $64.7 billion. But that wasn't the issue, right? Just like last time, the big focus for Microsoft this time around was Azure and its overall payoff when it came down to AI. And nothing that Microsoft shared within their earning report or their overall guidance call was necessarily bad. If you found anything bad about what they said, please feel free to share it down in the comment section, because I'm struggling to find what was bad. What caused selling pressure was that it wasn't as good as what originally investors wanted, right? There's this AI boom, and every investor is just like, AI is just the new shiny toy. And a lot of these trillion-dollar companies are heavily investing into cloud-based businesses and also to AI infrastructure, just like Microsoft. And all they said is that, overall, we are seeing growth, but it's just going to take a little bit longer than what was expected, and we expect to see those results in maybe the second half of 2025. And that's exactly what it was that was shared. So big technology companies have been pouring billions of dollars into data centers to capitalize on the generative AI boom. Google parent company, again, who has already reported earnings. Alphabet warned last week that this is a the capital spending would stay elevated for the rest of the year. All of these companies, Amazon, I could only imagine Apple, who is set to report earnings on Thursday, are heavily pouring into this AI development, this AI boom, into this cloud-based server, just like Microsoft. With that being said, the return is just not as quick as they originally expected. But you can see that these trillion-dollar companies are investing a lot into the future. But then why did it sell off so much? Ricky, I'm still not getting it. Well, actually, it's only down 2.76% now, which again, that reassurance of, I want to see if I could find the exact thing of what the CEO actually said. And let's see. Let me see if I could find it here for you guys. Said still investors who run up Microsoft stock by nearly a quarter in just the past 12 months. Our AI optimisms were disappointed by the Azure growth. So again, I really think it's that instant gratification. Maybe it's just me. You guys let me know down in the comment section. I'm not surprised by this at all. The stock market is a market that excels based off of future expectation and future growth, right? They set expectations now and they invest into it now and expect those returns later. And if that growth in the future is not actually met, just like when these reports come out, then again, there's corrections that happen because what was expected is actually not as great as what was originally anticipated. And then again, you see these over dramatic, sell-offs and these dramatic recoveries, but this should be expected. We saw exponential growth from $210 all the way to highs of $468. Think about that. This isn't a penny stock. This is one of the most valuable companies that's publicly traded, and it experienced a 100% return in just about 2 years. Is that not wild? And it's all because of this, again, recovery from the overall market, don't get me wrong, but also this expectation of this AI boom being the new shiny toy. This is why it's so important to understand that when hype is present, don't be afraid to take advantage of it. You just can't be surprised when these pullbacks happen because it's over anticipation and expectation based off of what we hope growth is. But again, in reality, these things always happen. They always come a little bit short. With that being said, also AMD reported earnings, and And AMD reported earnings way better than what was expected. I'm sorry, not way better. It came in better than what was expected with its earnings per share and its revenue. So it beat both. But the biggest thing that I would say is the takeaway is AMD is our AI business continued to accelerate, and we are well positioned to deliver strong revenue growth in the second half of the overall year. So I would say its guidance was simply just better. AMD, when it came down to actually reporting earnings, they came out at 69 cents per share versus expectation of 68 cents, better than what is expected. And they came in at revenue of 5.84 billion versus the expectation of 5.72 billion. Now, again, if you look at AMD and the way that it actually performed, after the market closed, this thing gapped up a total of 7% after market hours. Higher highs, higher lows, and it makes sense. Not only did it report come out better than what was expected, but based off of guidance, according to their executive, is they are seeing growth, better growth than what was expected, and they're very excited for this accelerated advancements that they are supposedly making when it comes down to AI. So again, that supports the case that yes, we did good in the previous quarter and we expect to do well in the second half of 2024, which is essentially what she said. So that is why AMD ended up going up. I try to keep it super simple for you guys to have a better understanding of, okay, well, both reported better than expected earnings. They both should have gone up. Well, that's not the case. One had an expectation, a lower deliverable when it came down to its actual expectation from its cloud-based growth and its AI investments paying off quicker or sooner than what was expected. And we definitely did not get that this time with Microsoft. But with AMD, not only did they report better than expected earnings, but they also reported better than expected guidance. That growth is going well, and there's more to come for 2024. And again, that's very encouraging for investors because AMD wasn't necessarily performing the best leading up to its earnings, as it was again trading at 135 when it was previously trading at highs of 227. So just something to take into consideration. Also, we have Meta that's going to be reporting earnings tomorrow after the market closes. And I want to remind you guys that not only do we have Meta reporting earnings, but we also have the FOMC rate decision. This is when the Federal Reserve at 2 p.m. Eastern time will announce if they're going to raise, pause, or cut interest rates. And then 30 minutes after, Jerome Powell is going to go live. I would love to host a free live session. I feel like a lot of you guys enjoyed our free live session today where I went live as Microsoft and AMD reported earnings. So if you want to take part in that, all I ask you to do is drop a thumbs up to this video, subscribe to the channel, and make sure you turn on your post notifications. And if you want to watch me trade live as soon as tomorrow, right at market open, that's going to be the second link in the description down below. I appreciate your time. I hope that you learned something new. And like always, let's make sure that we end the year on a green note. Take care, team.